Hi, my name is Nick Rosenauch and I'm a financial advisor at Nicola Wealth. Inflation is the measurement of rising prices of goods and services. The Consumer Price Index, or CPI, is the most widely used indicator for inflation by examining the average price changes of a basket of goods and services such as food, transportation, and healthcare. Inflation is very important to consider as it impacts our ability to consume goods and services and maintain a desired standard of living. It also impacts the real value of your assets as they grow over time. The real value of an asset is the nominal value adjusted by inflation, which can often be referred to as the relative price. As a simple example, if the price of a coffee has increased from $5 to $5.50, your investments would need to generate a return of 10% to maintain the same value relative to your coffee. This is very important to understand as the growth of your investments will directly impact your ability to spend future dollars and enjoy the same or even better standard of living. While a moderate level of inflation is good for our economy, the recent increase in inflation has quickly raised concerns for many investors. The Bank of Canada aims to keep inflation at 2%, midpoint between a target range of 1% and 3%. However, the year-to-date inflation rate has been circling around 4%. The rapid increase in inflation resulted from pent-up demand stemming from COVID-19 lockdowns and supply chain disruptions, coupled with low interest rates and increased money supply in our economy. In the long run, many economists predict the inflation rate will normalize as these factors change over time. The question now becomes, how do you protect your investments if higher inflation is here to stay for the time being? In my opinion, the best way to protect your investments from inflation is to have a truly diversified portfolio in line with your risk profile, goals, and objectives. Different asset classes will respond to rising inflation in different ways, so it's important to have the right asset mix in your portfolio. As an example, private cash flowing real estate, infrastructure, gold, and commodities have historically been good hedges against inflation, so they can help mitigate inflation risk in your portfolio while supplementing lower returns in other asset classes. Given the complexity in navigating the investment world, I recommend working with an experienced financial advisor who can provide a custom investment strategy taking into account your financial situation and long-term goals.